Billionaire investor Warren Buffett is betting big on semiconductors and microchips. Mr. Buffett's Berkshire Hathaway confirmed it had taken a $4.1 billion stake in TSMC. The Taiwanese company is one of the largest chip makers in the world, supplying an estimated 90% of the world's super advanced computer chips for tech giants like Apple and Qualcomm.
Warren Buffett donated more than $750 million to his family charities this week. SEC filings show that the billionaire investor gave 1.5 million Class B Berkshire Hathaway shares to the Susan Thompson Buffett Foundation, which is named for his first wife. He also gave 300,000 Class B shares to each of the three foundations that are run by his children: the Sherwood Foundation, the Howard G. Buffett Foundation, and the Novo Foundation.
Hello everyone. As we all know, Warren Edward Buffett is the most elegant investor in the world. His net worth is around $105 billion. But do you know one thing? That Warren Buffett is the most constant person in the richest list. From 1990 to 2022, he is always in the top 10 richest person in the world. In these 32 years, many persons had come and go, but Warren Buffett is still in between top 10. And another interesting fact about Warren Buffett is that after becoming such a huge personality with billions of dollars net worth, he is still living in a 30-year-old medium-sized house and driving a 20-year-old car. In our today's video, we are going to understand the strategies which are used by Warren Buffett to invest in the stocks, and also understand what should we do when the markets are crashed. Warren Edward Buffett was born on August 30, 1930. He is currently the chairman and CEO of Berkshire Hathaway. He is one of the most successful investors in the world. Buffett was born in Omaha. He developed an interest in business and investing in his young age. He went on to graduate from Columbia Business School, where he molded his investment philosophy around the concept of value investing pioneered by Benjamin Graham. He was inspired by a book he borrowed from Omaha Public Library at age 7, 1000 Ways to Make $1,000. He worked in his grandfather's grocery store. While still in high school, he made money by delivering newspapers, selling golf balls and stamps. He filed his first income tax return in his 14 years of age. Now, let's understand the investing strategies used by Warren Buffett. First one is, he always look for a margin of safety. A margin of safety is a cornerstone of Buffett's investment philosophy. In simple terms, a margin of safety refers to characteristics of an investment that help to protect the investors from losing money. For example, if a stock trades for $10 per share, but the company's assets are realistically worth $12 per share, then there is a $2 margin of safety. The intrinsic value of assets should prevent the company's stock price from declining too significantly. Buffett's goal is always to pay less than a company's intrinsic value. As he says, a too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business developments. The second one is focus on quality. Warren Buffett doesn't invest in junk. You typically won't see him buying struggling businesses regardless of how cheap they become. One of the best Buffett quote new investors can absorb is, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." The third one is, don't follow the crowd. Here is another piece of Buffett advice that is extremely important for beginner investors, especially in the modern age. Don't buy certain stocks just because everyone else is buying. But also do not aim to always be a contrarian and sell those stocks that everyone else is buying. As Buffett does, the best way to invest is to ignore the crowd entirely and focus on finding value on your own. He also says the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. The fourth strategy is, don't fear market crashes and corrections. The obvious goal of stock investing is to buy low and sell high. But human nature can compel us to do the exact opposite. When we see all our friends making money, that's when we feel like we should try to make money too. And when stock markets crash, it's our nature to get out before prices drop any further. Buffett loves it when stock prices drop, since it creates opportunities to buy at a discount, which explains why 2022 has been a particular active year. If you were shopping at your favorite store and suddenly learned that the entire store's prices were 20% lower, would you panic and run away? Of course not. Buffett embraces discount on his favorite stocks and says opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. The fifth one is approach your investments with a long-term mindset. One of the most important Warren Buffett quotes on investing that you can take is, if you are not willing to own a stock for 10 years, then don't even think about owning it for 10 minutes. He doesn't choose stocks just because he thinks their prices are going to rise this week, this month, or even this year. Buffett buys stocks because he wants to own those businesses for the long term. He still sells stocks frequently and for a variety of reasons, but he approaches most of his investments with the mindset of owning them forever. The sixth one is, don't be afraid to sell if the scenario changes. When Buffett was asked about an investment, he decided to sell at a loss. He replied, the most important thing to do if you find yourself in a hole is to stop digging. While he certainly wants to own every stock he buys forever, the reality is that outlooks change. It might surprise you to learn that Buffett bought a large position in mortgage agency Freddie Mac a couple of decades ago. But a few years ago, before the financial crisis of 2007 to 2009, he noticed the lender's management had started to take unnecessary risks with the company's capital, and he decided to sell. When the financial crisis hit, it became clear that Buffett had made a smart move. The seventh strategy is learning the basics of value investing. Warren Buffett is widely considered to be the world's greatest value investor. Value investing prioritizes by paying low prices for investments relative to their intrinsic values. A value investor's goal is essentially to buy $100 worth of a company stock for less than $100, ideally much less. Value investors seek out and invest in companies with intrinsic values that are well above the enterprise values implied by the prices at which the company's stocks trade. Value investors like Buffett expect that the market will eventually recognize the full value of an undervalued company, resulting in an increase in the company's stock price and profit of an investor. The eighth strategy is understanding compounding. Warren Buffett is perhaps the best example of the power of long-term compounding. Buffett uses compound interest, dividend reinvestment, and the power of constantly reinvesting the operating cash flow generated by Berkshire's business to his advantage. How powerful is this? Berkshire has averaged a 20.1% annualized return since Buffett took over in 1964, compared with 10.5% for the S&P 500 index. This may not sound too spectacular until you realize that, over the time, this has resulted in 36,41,613% total gain for shareholders versus just 30,209% for the S&P 500 index. At last, it is research and reflect. Buffett regularly spends long days in his office in Omaha. It often surprises investors to learn that he spends the majority of his time just sitting alone and reading or not doing anything at all. He has been quoted as saying, I insist on a lot of time being spent almost every day to just sit and think. Buffett views knowledge as something that compounds over the time, and he believes that much of his success can be attributed to the accumulation of as much investment knowledge as possible. Thank you so much everyone for giving us your valuable time and watching our video till the end.